Since the beginning of the year, crude oil prices were all-time high. Oil companies like Shell, BP, Chevron and others hit incredible earnings results. However, since summer, crude oil prices came down from $115 to just $82. So let's try to dive in and figure out what is actually going on. In this video, you will learn what is the reason of the spike growth of oil prices, what are the major events that supported oil market during 2022, and what oil prices are hitting to in 2023. Over the last year, oil and gas production TTF was one of the best performing TTF on Gainy's platform. It actually has a pretty interesting result, as you can see on the screen now. So basically over the month it got just about 0.6%, but if you look through year over year, you will see that it has about 60% growth, and it has about 100% growth if we count this from the very bottom of the pandemic situation. Another interesting chart that I want to share with you is actually price for crude oil and Chevron. So basically, as you can see, they've been growing pretty similarly at the same time with each other. So basically what it shows us that the higher prices for crude oil, then higher prices for oil companies, which is pretty much obvious. Last but not least, I wanted to share with you OPEC global demand forecast for 2022 and 2023. So basically on this chart at the top, you can see what OPEC, or the Organization of Petroleum Exporting Countries, that controls about 40% of oil production in the world, forecasting of global demand for crude oil. And as you can see, in 2022, we had roughly about 100 million barrels per day. For example, the US consumes about 4 million barrels per day. Try to remember this number, as it will be useful in the further discussion. So let's start with the reason for oil prices rise sharply in the beginning of this year. And first and the most obvious reason is the reopening of the economy due to the over of pandemic era in the US and overall world. And this is for sure one of the first and big implications of the oil growth this year. Just right after the reopening of the economies, we got the war in Ukraine, which made a lot of volatility on energy markets, as multiple sanctions by Western countries were made against Russian Federation. By the way, Russia exports about 8% of all crude oil in the world. To stabilize oil prices, President Biden has announced an authorization of 180 million strategic petroleum reserve of the United States. Basically, it allows to use some of the oil that's been specifically held for harmful situations like we had in the beginning of this year. Last but not least, OPEC Plus didn't increase oil production by Biden's request. President Biden was basically asking OPEC Plus to damage their own economies in effort to ease inflation in the United States. The OPEC Plus participating countries, including Russia, had no intention to responding positively to Biden's request. However, even if OPEC Plus didn't approve an increase of production, the US and Western countries started to look for other ways of oil production to increase, including additional production in the US and other countries. For example, the US is looking to ease Venezuela's sanctions, enabling Chevron to pump oil from that region. The Biden administration is preparing to scale down sanctions on Venezuela's authoritarian regime to allow Chevron Corporation to resume pumping oil there. There are talks that in exchange, current President Maduro will resume collaboration with a country opposition to discuss needed to hold free and fair presidential elections in 2024. US officials said the details are still under discussion and there is no plan to change the sanctions policies without constructive steps from the Maduro regime. However, if the deal goes through and Chevron, along with other oil service companies, are allowed to work in Venezuela again, it would put only limited amount of new oil on the market in the short term. Venezuela was once a major oil producer, pumping more than 3.2 million barrels a day during the 90s. Remember that number that I tried to memorize? About 100 million barrels a day is used today, and Venezuela was responsible for about 3.2 million a day in the 90s. The country is now exporting about 450 100,000 barrels a day and could double that figure in the matter of a month if those restrictions would be lifted. So what are the reasons of falling oil over the last quarter or so? Slower fuel demand in China due to COVID policies and weaker economic growth. Fear that Russia's supply could drop next month when tighter European sanctions on crude oil export come into the force that been announced recently. Green energy related bills that were implemented or with the recent bills in the United States. Easing of Venezuela sanctions that I just described before. And of course, US is increasing oil production in multiple regions, which might bring an additional oil to the market as well. Let me just show you this. Here it goes. Hopefully you can see this brightly on the screen. So basically US is considering some additional sources where it could increase the production, which eventually bring additional 8 million barrels a day total. However, there are bull scenarios for oil market as well. For example, OPEC is not considering to increase production as right now. As I described it before, they just denied Biden's request of increased production. On the other hand, OPEC forecasting minimal demand destruction this year and next year. And next year, they expect even growth of the demand. So they're forecasting about 102 to 105 million barrels per day. Remember my slide with the forecast, this one? So as you can see, they expect that by the end of 2023, we might have something like 105 million barrels per day. At the same time, with the increased demand of up to 105 million barrels per day, China is considering lifting COVID policies in the upcoming future, which, as I described in the previous video. The US strategic oil reserve shrunk almost half compared to the levels a decade ago. And European Union sanctions are estimated to reduce oil export volumes by as much as a quarter from pre-war levels by February 2023. So basically, even with the increased export of oil production in the US, and even if there would be some changes in overall OPEC policies, it would be still pretty complicated to get to 105 million barrels per day by the end of the year. So it might not be as easy to increase overall supply of oil that is required to keep the prices at they are at this point. Thank you very much for watching. Hopefully it's been pretty interesting for you. Leave all your comments below, or if you have any information that you would like to share with me. And I'll see you in the comments, and subscribe to our channel.